what you can see, from what James has done here, is he's not like immediately entering upon the break, trying to like get in as quickly as possible, right? Like he's deploying some patience, watching what's happening with price, waiting for sellers here to get taken out, price to be reversed, right? And you have all these trapped sellers that are maybe looking to sell previous day lows, looking to trade that breakout. Maybe you can share with us on screen how you would exactly use. I think a cool thing you could do is almost like remove every other indicator on the chart, right? And just have the previous day highs and lows.
Look at a Monday. When we take out previous day's highs on a Monday, year to date on the Nasdaq, 91% of the time it closes a bullish closing day.
And price is instantly reversing and continue. And he's looking to take that continuation play rather than take the breakout play, right? And I think that's, to me personally, that's a way smarter way to trade. It's to take trend continuation, wait for everyone to get chopped up, wait for everyone to get faked out, wait for that trend to establish itself, and then get in and ride the trend. And your only goal is just catch a leg. What's going on, guys? Welcome back to the Challenge Accepted podcast. And today is actually episode 6. I can't believe we're already at episode 6. It feels like we've had so many conversations, but only started this podcast a while ago, and episode 6 it's going to be an interesting one because we're going to dive a little bit more into the trading side of things today, because we want to, I want to talk about a subject that's very, very popular or going to be a hot topic amongst a lot of traders, which is indicators, right? Everyone got their favorite indicators. Everyone's got this and that algo, from trading signals, trend following stuff, to stop loss. There's a lot of different stuff out there. And obviously, if you're using TradingView to trade, which everyone I know is, you have a huge library that's available to you, and you can put together different strategies even completely based on indicators. So I'd like to kick off today's episode by asking our resident professional, James Bruce here, if you could only use one indicator on TradingView for the rest of your life, what would that indicator be?
So that indicator, I don't know if this would actually be classified as an indicator, but something that I really, really love is the previous day's high and low. So you can actually get that as an indicator on TradingView. There's a lot of variations of it, but basically the previous day's high price and the previous day's low price. That indicator, I think, for me personally, would be the indicator that I would use for if
you would choose that over something like an exponential moving average?
See, that was my second one. If it was an indicator or not, I do like the 21 EMA as well. But if you're looking at the previous day's high and lows as an indicator, I would choose that over an exponential moving average. Yep.
Okay, but so how do you use this previous day highs and lows? Maybe you can share with us on screen how you would exactly use. I think a cool thing you could do is almost like remove every other indicator on the chart, right? And just have the previous day highs and lows. And for those of you that don't know, James is a scalper and a day trader. He trades mainly indices and stocks. And I think especially when you're dealing with these markets, previous days highs and lows are very, very key levels where you can expect some type of action. You can make some type of read based on these. So please share with us how exactly you would use these, and how can you use the previous day's highs and lows to make an informed decision. Do you use it, for example, to enter a trade, or do you use it to create a bias? How exactly do you use this?
So I used to use it quite a lot when I was trading currencies, but then Edgeful, and if you guys watched the previous episode, not to harp on them again, but I think they're a great tool that traders should be using. Basically, I use it for helping with trend as well as bias. So how I was learning from someone, and called Stacy Burke on his YouTube. Quite often he speaks about previous days highs and lows, using it as trend. If we're trading within, how I kind of see it, if we're trading within previous days highs and lows, I kind of see it as the market's not ready to break out yet. It's markets are going to do 3 things. They're going to break out, and they're going to continue. They're going to break out, and they're going to fail, or they're going to chop. right? So how I see it is that kind of when I'm getting trading, I had a bad start in November, and I went through again with my trades, and I was like just trading within that previous day's highs and lows, just myself. So as I mentioned, I'm a scalper or day trade, right? So I'm not looking to trade, hold trades for overnight sessions or anything like that on day trading accounts, right? And where I've actually found a lot of my success in the last couple of years as well has been on some personal accounts trading, these stocks. So stocks work really, really nicely with these indexes as well, but I have seen them to work very, very nicely on individual equity. So basically, this is actually a trade that I took on Friday live on stream. But basically, you get yesterday's low over here and yesterday's highs. Look how we gap down. So this is the pre-market and post-market trading hours, right? We gap down below previous day's lows, and that tells me, okay, I'm going to look for continuations here, right? Or obviously, if it's going to reverse and come back up and bounce, and we don't get back, price doesn't move back in to that yesterday's previous day's low zone. So I look for continuation off the 21 EMA, but price action was showing that it was looking pretty bearish. Yeah, so get a bearish engulfing below previous day's lows, and I'm looking to continue that trend. I don't get all of this move, but I got a good chunk of it down here. So that's basically how I'm using previous days lows and highs to find good trading opportunities.
So my question here for you is if if a day is looking more ranging, if a day is trading within previous days lows and highs, or we just looked at this example where price kind of breaks out. If price is ranging, do you have a specific strategy for trading that, or is that kind of like a signal to you, hey, like we might not get much volatility today, maybe I'm looking to stay out?
To be honest, I would love to say I don't trade those days, but I probably shouldn't trade them. It's just but we all have that degen in us, and I do look to trade it sometimes. The strategy when it's inside of it, at the moment, I've got a hard rule. I actually was going over some of my stats on TradeZilla this weekend, and I was looking at my trades trading within the previous day's highs and lows, and I'm going to be staying away from that because my best trades just simply don't come from that. So you can even look at look at this day here, where we gap up pre-market, right? We gap up above previous day's highs. We come back down, and you could be looking you could take this reversal back here, but I would personally, for me, I like trading with trend. I'd be looking for continuations to the high side. But yeah, for me, trading within those previous days highs and lows is a no-go for me for now.
So can you explain a little bit to me, because I personally don't use this indicator, right? So you have these two white lines on the chart, the horizontal levels. I'm assuming those are the highs and lows. Is the one above is the previous day high, and then the one below is the previous day low, right? So how I would look at this is if I'm trading, for example, in today's session, we're not, oh yeah, that's because the market hasn't opened yet.
The market hasn't opened yet, yes. But
we would get new lines once the market opened.
Correct. Yes, but on the indexes, because the market's already open, we do have the lines already. You can see the Nasdaq. So this is the Nasdaq. We're trading within previous days highs and lows. We haven't breached one of them yet.
So your main use of this is after previous day highs and lows have been breached, you find yourself entering on that direction. Is that correct?
Yes, correct. Yeah, 100%. So when I'm trading like when prices hasn't breached one of these sides, I do find that I get chopped up more often than not. But just for me personally, in the way that I trade,
I really like this because when you're trading, lower time frames, when you're scalping, it's very useful to align yourself actually with a higher time frame strategy, higher time frame setup, right? Higher time frame bias.
I do want to bring this up again. Yeah, I know we spoke about them we had Andre on last stream, but this is so I used to use this beforehand because obviously I was being told it by a couple of courses that I did take and stuff, because I'm always trying to learn, right? This was not something that I used in my own trading, until probably about 2 years ago. And I felt it helped me a lot with my currency trading. And now obviously moving over to the indexes as well. Stocks, I feel that it works really, really nicely with stocks as well. Like you saw that meta play on Friday, but let's have a look at here on the future. So this is just the stats on NQ year to date. when we take out previous day's highs, 78% of the time we close as a bullish closing day, and vice versa for shorts, 76% of the time. Now you can actually look at this by weekday. Look at a Monday. When we take out previous day's highs on a Monday, year to date on the Nasdaq, 91% of the time we close as a bullish closing day. So it's quite a bullish sign, and then you can go to Tuesdays, that drops down to 75, Wednesday, 84. I know Thursday is the least one, 66, and then 79 again. So this is just looking at the stats. And I think we can go to stocks here as well. We can look at the previous day's range. Let's go to Meta. So Meta, right? If we can go to Meta, Meta platforms. So about weekday on a Friday, when we break through previous day's lows, which I was trading on Friday, 84% of the time we're actually going to close as a bearish closing day. So when I took that Meta position on Friday, let's go to it. Yeah, Meta, right? And obviously we had a massive sell-off on Friday. I think Meta was down like 4% or something like that. But you can see here, very rarely are we going to bounce here and come back up and close on highs. Yeah. So knowing that, I was like, and I like price action. We're trading below previous day's highs on those. Very simple. It's a simple tactic that I use to help me get into trades. Is it going to work all the time? Of course it's not. Nothing works all the time in trading, but I think I'm seeing it from my own stats now this month as well, going over this past weekend. Just trading when we haven't reached these highs and lows has been something that I've been doing very poorly this month.
So you're looking to eliminate that from your trading, from what it sounds like, right? You're trying to just make sure that you're actually trading when the bias has been determined or when you have an actual edge.
Yeah, well, we can come on the desk every single day and find a trade. Like, I can get on a trade right now, so can you, and say, okay, well, let's buy, the Nasdaq. But I think the thing that's been helping me a lot to my trading is when I do go, because I can go through patches I'm doing really, really well, and I can be going through patches I'm doing extremely poorly. I think during those poor times, just time to see, okay, what am I actually doing poorly? How can I get back to finding a little bit of, my consistency and game again, Yeah.
I really like this. I really, really like this, actually. I think that this is such a good way for you to firstly know when you're supposed to stay out of the market, right? You don't even need to do much. You come here, you look at where price is, and you say, okay, for example, right now, like, if this is where you're trading, you would look at this and say, okay, cool, price is not broken out of the previous day's range. I don't have a bias. I don't have an edge. Let me step away from the market. Right? That becomes a way for you to sit on your hands, so to say, before your edge shows itself, right? Like, that's why something like Edgeful is actually so cool. I really do think Edgeful is a really, really cool piece of software. Especially for day traders. I think, day traders, scalpers are going to benefit hugely from this tool, because you're going to be able to take a look at the numbers like what James has shown and say, hey, how many percent of times, when price actually takes out the previous day's highs, do we end up closing bullish? Because if it does end up closing bullish, it means that price is not going to come back inside and close like within or below that candle. It's not going to turn into a bearish day, right? It's not going to actually reverse on you. The likelihood of that reversing on you is it's more likely for continuation than it is to reverse. So you can trade with that in mind, knowing that you can take this side, and that's an edge, right?
I do want to show a position. I actually also took this live on my ASFX TV stream on Friday. It was a Tesla long. I was pretty nervous to take this position because the whole market was actually selling off. As you can see on the Mag 7 stocks. Sorry, let's actually, you won't be able to see on, but the Mag 7 stocks, our faces are covering it. We can do this. Let's see if we can do this. Let's go like that. The Mag 7, there we go. Mag 7 stocks here were all down, so across the board, but Tesla was the only one that was up 3%, right? So 3.07%. So if we go back here, so we can just get it here. We actually do take our previous, this is one where it reverses, So we took our previous day's low here, and then we didn't get any follow through. So I saw this, I came onto my stream at about 10:30 Eastern time, and I saw we had a nice bullish engulfing closure here, and I was like, I like this. I like this for longs back towards previous day's highs, because you respected previous day's lows. We don't get underneath it and start making bearish lower highs. Simple price action below previous day's lows, and we are holding it. So I got in and I got out over here. I didn't get this final little pop there, but I got out there and it was a nice trade.
So this is a clear sign of basically what's a liquidity grab that's actually happening, potentially on the higher time frames, right? Like below every day's highs and lows, there's usually liquidity. And a lot of times, when price actually wants to reverse or, there's orders that are waiting to be filled, price tends to go and grab that. And then as you can see on this chart right now, like it looks like price just snapped back. It wasn't like a break and a continuation. I think one of these things, like this is one of the reasons I actually I stopped trading breakouts. I don't know. I feel like breakout trading is like a thing that a lot of beginners or like noobs do. I was trying to do it a lot, because it's like exciting when you catch that one where the breakout is real and actually rips. You're just like instantly up, and you're like you just you just watch the price go, and you're like, oh cool, it's so great. But a lot of the times what actually happens is like fake outs occur or price can tend to chop, right? Like depends on how you look at your level. And a lot of times when you're really trying to trade at these levels immediately, I think that you have a tendency to get chopped up. But what you can see, from what James has done here, is he's not like immediately entering upon the break, trying to like get in as quickly as possible, right? Like he's deploying some patience, watching what's happening with price, waiting for sellers here to get taken out, price to be reversed, right? And you have all these trap sellers that are maybe looking to sell previous day lows, looking to trade that breakout. And price is instantly reversing and continue, and he's looking to take that continuation play rather than take the breakout play, right? And I think that's to me personally, that's a way smarter way to trade. It's to take trend continuation, wait for everyone to get chopped up, wait for everyone to get faked out, wait for that trend to establish itself, and then get in and ride the trend. And your only goal is just catch a leg. Just catch one leg of the trend. Everyone's out here thinking like, oh, to trade a trend, I need to catch the absolute bottom and then get out at the absolute top. That's not how you trade trends. When you're trading trends, you're just looking to take one chunk out the middle. If I can catch even one impulse of an overall trend, that's money in the bank, right? So I have a follow-up question here, actually, with the daily highs and lows for you, which is if price is trending strongly, right? Let's say we get a strongly trending breakout like on that meta trade that you took, right? It kind of price left and never came back. Um is there ever a time like where you are looking at this, you have a clear bias? Do you ever look at this and say, okay, there's no way for me to get involved? Or how exactly are you getting yourself involved in these situations so that you can actually measure out your risk reward, right? Because that's the next step of trading. It's like one side, I really like that we started with this indicator because this almost I think most people should be doing this. Have a way of determining, am I trading or am I not trading? And if I am trading, am I long or short? Right? Like that's the most basic part of day trading that you need to cover. So the next part is, how are you getting yourself involved? And maybe there are other indicators that you're using that maybe we can talk about now and kind of give people a full view of like, hey, this is the suite of tools that I use to help me not just analyze which side I should be on, but get myself involved.
Yeah. I use the moon phase cycle then to look for
And he only trades on 3 days before full moons and 3 days after full moons. That's how he has his 80% win rate, guys.
Oh
Okay.
gosh. Yeah. That's great. So the other indicator that I love to use is the 21 EMA. And as you can see, we're on the 5-minute time frame here. So I like to use the 21. It's pretty simple because it's a moving average. If we are rejecting off it and I'm looking for shorts, like over here, we're trading below it. We don't touch it necessarily, but if you go down to a low time frame, you would have touched it, right? Because different moving averages, the 21 will look different on a lower time frame or higher time frame. But we're trading below it. We never get back above it. And I took that entry over here, like a bearish engulfing below the 21. And then also when we come back to the 21 over here, so I was already out my trade by then, but I think this is something that I could have been better at on Friday. I could have re-entered and maybe looked for continuation plays as we don't break through it. So we're not showing signs of maybe like a bottom forming and we reversing. We're actually holding the 21 EMA on the 5-minute time frame to the downside. And the actual first time that we get back above it is actually only down here late on in the day, 9 o'clock my time. But this hold over here could have told me that we could get some more players to the downside. So that's the other indicator I do like using. In fact, actually on my charts, if I only had this the previous day's high and the 21, it still would be, that's the basis of what I'm using.
So what you're saying here is the 21 is your trend strength indicator.
Yes.
Almost, right? Like that's what you already have your bias, right? Like you're not looking for buys, and you're using this EMA as an indicator of like, okay, how strong are we still pushing? And you're taking it, if we start to break above that the trend is either reversing, could be short term, or weakening, and you kind of don't want to be involved anymore. Is that how you're using the 21?
Correct, yes. And also I do use it for entries. So I like to get entries at as close to that 21 EMA as possible. Yep.
And how do you enter? So for example, like we see that you've taken an entry, off of that like bearish engulfing, right? Like you saw momentum and you jumped on board that momentum, and you were looking to carry that to the downside.
I'm using simple entries. I use bearish and bullish engulfing candles at as close to the 21 or off the 21, meaning a body off the 21 as close as possible. So like this would be a good example. We got a bearish, this bearish engulfing bar over here underneath the 21. And then obviously over here, if we come to my Tesla position that I did take on Friday, we got a bullish, kind of like a bullish engulfing over here, this candle over here, right? Bullish engulfing. I got in one bar later, but that bullish engulfing, you can kind of see like this is like the two bullish engulfing candles off that 21. You see the body touching that 21 as well. So
you would also take it if the price is breaking below the 21, but then it's snapping back, right? Like it's forming some kind of a reversal off the 21.
So look over here, I actually have my notes, I actually added in. You see I added in some because you see on this bullish engulfing over here, off the 21 EMA, I added into my trade. That was actually probably the best entry of my, because I had a little bit of drawdown on this first entry. But that's where I added in this bullish engulfing candle over there.
Mm-hmm. Yep. And can you, like, I really like that you're bringing up adding, right? Like, and maybe this is the last topic that we're going to cover here, because I really think that what we've shown today in your trading system is almost entirely what you need, right? One thing about indicators, and I fell into this pitfall at the beginning, is like, you can really go too much. You can have way too much. I see some people, how I know someone's a terrible trader is when you can't see the candles on their chart. There's just indicators, right? We've all seen charts like that. When I look at someone's chart like that, I'm just like, okay, you're probably not making any money from trading because you can't even see the price, bro. If you can't see the price, how the fuck are you going to trade it? Because what you're trading is the price. Anyway, look at how clean and look at how simple things look on James's chart, right? Like, he doesn't have these lunar cycles up here. You don't need 500 indicators to become a profitable trader. Very, very simple. Right. First tool he uses is directional bias. Should I be trading? Should I not be trading? Boom. First stage covered. Second stage, once you have determined your bias, is just how can I enter? Right. And you can enter in so many different ways. You can, like James uses 21 EMA. You can use something like a super trend follower. There's a lot of different trend following types of indicators, which are all just variations really of EMAs, or variations off of ATR, like average true range, which is a volatility indicator. So my last question for today's episode, I really like that we're here, is we've talked about the pre, right, which is your bias. We've talked about the entry. And the last thing you mentioned was adding, right? Like, let's talk about adding and exiting a trade. Do you use any kind of indicator? Do you use anything to help you determine whether you should add to a trade or whether you should exit a trade? How do you determine this? And let that be the final part.
Yeah, so again, I love using this 21 EMA on the 5-minute time frame. That's the time frame that I use for intraday trading. I do think that when trading the stocks and that, I can sometimes go down to a 2-minute because it's, can be quite nice. But I like the 5-minute time frame. It's the time frame that I prefer using for intraday. Scalping sometimes it can be like a vortex on the 1-minute charts. It can be quite quick. So I enjoy the 5-minute. But in terms of adding, if I'm going to trade and we pulling back and we like at that 21 but holding above it, I'm going to look to add into it. And that's what I did here. I took my entry here. we pulled back, but look how we stay above that 5-minute 21. And we don't break below it. And then I'll be like, okay, get out of this trade. Like that's wrong. I'm going to be completely wrong. I should get out before it hits my stop loss, but we actually hold above it. And we have another entry, another confirmation of my entry that I like to see. Because if I was not in the trade from the previous first entry, I would want to be in here. So that's why I'm like, let me add in. And then that's when I get that nice pop. And that's when I'm being a little bit more aggressive. Also, with Friday, I saw we had broken previous day's lows. So this was a check mark for me to be like, this could be a nice trending day. I saw the S&P actually coming down. I was actually also short the S&P as well. That's why I was actually scared to take this Tesla play, because I had the Meta shorts as well. But I was just trading price action in front of me. But again, I had the Meta play and the S&P play first. But adding in, if that 21 EMA is holding, I'm looking to stick to my guns, and I might look to add in if I'm being a little bit more aggressive. So yeah, I love it. And well, yeah, DY. So this is actually a trading plan on TradeZella, right? But you can actually see I actually have this written down in my trading plan. This is just something that I believe, but I said the core of every market move is dictated by the previous trading day. A market can only go up when it trades above previous day's highs, and a market can only go down when it trades below previous day's lows. So just so I love using that previous day's high and low for my thing. And you can actually look here. I even have a playbook of trades. So this is something I've been working quite hard on in the last 3 or 4 weeks. Since moving over to the indexes, but I actually have a playbook of trades. So I think every trader, as we wait for this to load, every trader should know what their best plays look like. So I got a previous day's high, long and short. And then he has a bunch of markups that I got. And then I got a previous day's low, long and short. And then I've got another type of playbooks that I use as well. But these are the main ones. So you can look over here, previous day's low, long. So we can just have a look over here. Here's a previous day's low, long. Here we bounce off the previous day's lows. This is on the Dow, and then we get that bullish engulfing.
So this is like your reversal / trap fake out play, right?
And then you're correct. And then we can look at a previous day's low short, and this will be like a continuation play right over here, actually on the DAX. So we're trading below previous day's lows, we get the continuation. So I've got a bunch of I've got continuation plays and reversal plays. I do like to trade the continuations more often though. They're not.
Yeah, I personally find, the continuations to always be the most consistent, just as far as, my own personal history of trading. I've been a trend continuation trader for just the longest time. Like apart from the first, 6 to 8 months of just really messing around, like not knowing what I'm doing. Like I really started to discover like trend continuation plays. And then that's just like, I've never strayed from that. It's just, that's it. I don't trade breakouts. It's just trend continuation. And then one of my entry triggers was a trend continuation fake out, which is I look for the trend already established, and then I look for that fake out of one leg where it's looking to take out that previous, like one of the previous highs and lows. And I'm looking for that to be a fake out that then continues that trend. Right. So, yeah, I think this has been an awesome episode. Thanks for sharing 2 of your best tools, James. I think a lot of traders, for the people that want to know, what is this indicator called on TradingView? Is it just daily highs and lows? Is it buy someone special?
Previous day's highs and lows, and you can actually get the previous day's high and low indicator from Edgeful. That's the one that I use, but you can get, I'm sure there's a plenty of other variations as well.
So previous days highs and lows by Edgeful is the one that you use. And then that 21 EMA.
There's another one that you can use, I'm sure another plenty, but there's another one that I used to use before Edgeful came out with their indicators. It's called previous day's high and low. I think it's like, let's have a look at previous, just to give the guys. Previous day's high and low by Josh Trades. That's the one that I used to use before Edgeful came out with the indicators. Yeah.
Okay. That sounds amazing. Thanks for sharing 2 of your favorite tools. I hope you guys enjoyed this episode. This was actually a really, really cool one because we really got to dig into your system. And I think this 1-2-step process of bias, whether I should trade or not, and then your execution is really how everyone should set up. You can have your own flavor, right? You can have your own way of determining bias. James is using daily high and low. You could have something, maybe 2 kinds of EMAs. For me, I use EMAs to determine bias, and determine whether I should be in this market or completely not. All right. But the steps are the same. You have to determine whether this is a market you're interested in. You have to determine your bias, and then you can start to use other tools to help you get into trades. So I really hope you guys enjoyed this episode. Thanks for all the amazing insight as usual. And we're going to sign off for now, and we hope you tune in for the next one. See ya.
Yes, sir.